You should be able to see comments now, and we should be live. Hey guys, welcome to our broadcast. I want to introduce you to Jason Meininger, and he is the Senior Loan Officer with Thompson and Kane, and has done a ton of deals with many of the buyers I've been working with, and I've seen him go above and beyond the call of duty. And we were just talking a little bit ago, Jason, about about the most interesting experience you've had so far. We're waiting for a couple people to join. Go ahead and share it if you can.
Well, it's just, the old saying, if it can go wrong, it will. I had a refinance. When we started it, this particular borrower was not married. And when she showed up at the closing table, she was married. So that requires changing everything. And of course, like they say, and as busy as it is right now, those details matter. And when stuff goes wrong at the last minute or changes at the last minute, causes a lot of frustration and stress. And we all have to keep smiling and moving forward and going on to the next one. But it's just been an exciting time, and it's busy and it's fun, but at the same time, it's stressful. I know that I'm very thankful for the company I work for. I've got a great team. I am just blessed in that regard. They're strong. They work hard at everything we ask them to do. And deadlines are important to everybody. And it was just, I thought it was worth a chuckle. Just, of course, so you decided to get married a week before closing. Congratulations. That's great. Now I've got to redo everything.
I know. I just did closing a little bit ago, and it's like nothing is easy anymore. I remember when I started this business 14 years ago, it seemed like you could just go right through to closing. Like you'd get a deal together and then you just let go of it, and magically the check would appear at the end. And now it's like, man, you got to work through everything. But
with all the changes, I think this is a good time to talk about a lot of this stuff because with the virus, I think the perception may be that a lot of stuff has gone away in terms of lending programs. And it's just not the case. It's business as usual. There is some things that we still need to maneuver. A little bit has changed with credit score requirements, but other than that, it's business as usual. And it's busy, and there's a lot of inquiries. There's not enough listings. Rates are very competitive. It's a great time for people to really consider transitioning in a home. And I think that this is a great time to talk about it, just to reassure people that stuff has not changed to the point where nobody can buy a house. That is absolutely the furthest thing from the truth. It's good to go, business as usual. And I know you're wanting listings. I mean, please give listings.
Got a bunch of buyers can't find houses right now, so it's kind of tough that way. One of the things I was going to mention, oh shoot, that happens to me. I get this camera in front of me and I just totally blink out. We've got a couple of different loan programs, and maybe it will come back to me. Oh, I know. I was going to share too, we are doing this live. So if any of you guys have questions along the way, Jason is an expert. He knows all of the things we're going to be talking about today. So feel free to ask him any questions you have. We could play Stump the Chump. See if we can.
Oh boy.
So if you can ask a difficult question and see if you can stump Jason. And I'm sure Jason will be available after this is over too. You can just look him up, Jason Meininger. Well, it's tough to spell, Thompson and Kane, but you can message me. I'll get you in touch with Jason too. We thought we had our phone numbers popping up here, but they're not. So that's the way it goes sometimes. So here we are. Let's talk about some of the loan programs that are available right now. You've got a couple of them that people don't even have to bring money down, right?
Well, we do have a couple of 100% programs. The idea, I think, is, people obviously down payments. I always ask people, are you interested in a specific loan program? Or are you looking for the best interest rate with the least amount of money out of pocket? And typically people revert to that second answer. I'm looking for the best interest rate with the least amount of money out of pocket. And in this particular area, USDA and VA loans can offer 100% financing. And if the contract is structured appropriately up front, you can put that borrower in a position to bring little to no money out of pocket at all. So you're buying a house, you're closing it, and all you have is the expectation of first payment. And with USDA, they do finance 100%. Seller concessions are allowed to pay up to 6% of the purchase price towards closing costs and prepaid items. So if you're buying a $100,000 house, that's going to give the borrower up to $6,000 if the seller is obviously willing to do it.
Right.
And in most cases, closing costs at that price point will be under that figure. And we do it all the time with that loan program. Where in Hannibal, Missouri, and that's same true also for Illinois, where the Camp Point and Minden and all these rural areas around Quincy, they are USDA eligible, and the property does have to be USDA eligible. If you type in USDA eligibility map on your Google search, directly with the USDA website, you can type in any address and they'll tell you whether or not it's eligible. Most of Quincy is not, but on the outskirts around Quincy, there is eligibility. And of course, talking to a realtor is the best way to get that information so that you're obviously looking at properties that are eligible for that program. Another nice thing about USDA is it's got flexible lending guidelines. And when I say that, sometimes credit is limited. While credit score requirements are still there, if you do have limited credit, they do accept alternative trade lines, such as monthly recurring bills that you can prove are paid on time for 12 months. Utility bills, cell phone bills, gas bills. These would be acceptable forms of alternative trade lines if your credit history just wasn't on its own strong enough to qualify. We do have the underwriters and experience in our office to navigate through those lending guidelines. And obviously, if you ever have any questions, reach out to me, and we'll be happy to run a pre-approval eligibility and see what we'd have to do.
Sure.
Other than that, going to VA, another great 100% finance program, allows up to 4% in seller concessions. So on that $100,000 house, that's $4,000. So maybe not quite all of them, but pretty doggone close. Just kind of depending on what those fees all break down to, the escrows, the title expenses, everything like that. Of course, with the VA, you do have to be an eligible veteran, service member, or surviving spouse. And if you have any questions, you can visit the va.gov. They have housing assistance and home loan information there on how to obtain what's known as a certificate of eligibility to ensure your eligibility is there to purchase what you want to. Once again, if you need any assistance with that, myself, I'd be happy to assist, as we do know how to navigate those programs as well. But it's great because when you put somebody in a house and they don't pay any money when they close, you should see the smile on their face, because some people just don't think that's possible, and it is possible. It's just all about A, getting pre-approved for that program, and then B, having the realtor, this guy, structure the contract appropriately to ensure that everybody's expectations are being met.
Yep. Now, when you're discussing VA and USDA loans, are you coaching and telling them, hey, this is how much you need to ask your realtor to put into closing costs? Is that kind of the, or
well, I don't do that. I don't make that assumption, because only if they have liquid capital or assets less than what I think closing will be, I give them an expectation for closing costs. But sometimes in a negotiation, the seller's not going to be willing to give that up. So I would rather that they handle that with the realtor as opposed to me. If they don't have enough to close, I'll definitely identify that and say, you either need to come up with a gift, B, more money, or you're going to need these concessions. But I don't recommend it. I leave that up because it's such a competitive market. There may be a circumstance where the seller is not willing to do that. So I just give them the expectation of what closing costs will be. And then from there, I will allow the realtor to take over to advise appropriately.
Perfect. Okay. Well, we've got a couple of other loan programs here that we're talking about.
Yes.
They're kind of scrolling across the bottom.
Yep. And with regards, I would usually come in here and say this credit score, but right now things are moving. This pandemic has had investors and different banks chasing up and downs with terms of credit score requirements. But one of the most flexible loan programs out there is FHA.
Okay.
It only requires a 3.5% down payment, and in most cases, I would probably consider it one of the more flexible loan programs to qualify for. So when I say loan programs, I can tell you it'll go down in the low 600s range right now. Of course, it has to be approved through Fannie Mae's internal scorecard, the Fannie Mae desktop underwriter. And the other nice thing is it'll take a debt to income ratio on most average up to 56%, which is the highest DTI of any loan program that I'm aware of in terms of eligibility. So when you get into those situations where conventional didn't work because you were maxed out in the 40s or USDA, that's a great last ditch effort. Still a low down payment, still a fixed rate interest. It's still got all the nice features of a standard loan, but it's just a lot more flexible. That 3.5% is required to be out of the borrower's pocket. I cannot concession that.
Okay.
But you can concession closing costs, once again, up to 6% to only leave them with the 3.5% down obligation through their own funds or a gift. So there are, it is one that we do use a lot. And like I said, people would be surprised, I think, to see how eligibility exists, because it's not, it's very flexible, I guess is the right thing to say in terms of underwriting.
So you gave me a couple notes ahead of time, and I was kind of looking over these. Now, conventional, I always think of 20% down or 10% down, etc. You've got down here as low as 3% down. So that puts it in striking distance. FHA.
There are certain programs, first-time home buyer, and then through Freddie Mac, where you can do 3%. Now, not everybody's going to qualify for 3% just because you're a first-time home buyer, but it is possible. We do a lot of them. And the nice thing about conventional, this is the good credit program. This is the one that's designed for people with higher credit scores. Mm-hmm. The mortgage insurance factors are way less than, say, FHA. And it's just one of those situations where, you know, I always tell people if you're the 800 credit score, or, you know, it's just extremely competitive. And mortgage insurance on those, the higher the credit score, the lower the mortgage insurance. And then the shorter the term, the lower the interest rate. And right now, with those, and right now as of June 12th, 2020, most of those, if you're over a 700 credit score, most of those loans have rates in the twos, between a 15 and 30-year fixed. And that's as of today. Of course, rates will change, but my goodness, some of the stuff I've been locking in here lately is as good as I've seen it ever. Wow. And back to great time to transition. Sell your house for top dollar, lock in on a great fixed interest rate that you wouldn't have been able to get a year ago. So it is a great time to think about it.
Yeah, it's a great point, because houses are selling pretty well right now. I'm seeing that in my business. But if they're selling high, then if you lock another one in, even if you're getting it a little bit higher, the cost of the money to pay that down if you're getting a loan is so small that it would be like paying much less and having a higher interest rate, a normal, you know, interest rate.
Well, and in addition to that, you know, your mortgage insurance, because you're putting 3.5% down, is there. But when you sell a house, if you have the capacity to put 20% down, that eliminates the mortgage insurance. That makes the rate better. That gives you the opportunity to have a shorter term to build equity faster. There's just so much to consider. And while rates are this low, it's definitely time to think about it. I mean,
it's a good time to move up, because the once in a lifetime when it's this low. I mean, it's ridiculous. But your monthly payment is still going to stay small. It's amazing.
Dollar for dollar, it's going to be better.
So a couple of questions I was thinking of as you're talking about it, and these, we'll call them 4 different programs: USDA, VA, FHA, and conventional. Tell me about PMI. Which one of these includes the private mortgage insurance? And I know at 20% automatically it kicks off of the conventional. Below that, the conventional has it. But FHA, VA, USDA, do any of those have PMI?
Well, USDA has something known as a funding fee. It's relatively inexpensive in comparison to other loan programs, but with USDA, they charge a funding fee up front and then monthly. With VA also charges a funding fee, but that can be waived under certain circumstances if there's a service-connected disability, and there's other factors that can play into why that would be waived. But VA has zero mortgage insurance. Even if you finance at 100%, you don't pay mortgage insurance as a eligible borrower under that loan program. That's one of the better features of it, is that that does not come into play as mortgage insurance. With FHA, mortgage insurance does apply. And then, of course, with conventional, yes, over 20 or if you put less than 20% down, you'll also have mortgage insurance on that as well. Typically, on conventional, the mortgage insurance is better than the FHA program, but they do both. Conventional does vary based on credit score. FHA is pretty standard regardless of credit score. The MI factor is the same.
Mm-hmm. All right. Now you were talking about the higher your credit score, the lower your PMI would be, at least on the conventional ones. And then on some of these others here, I see like the USDA, VA, FHA. Well, what's the credit guideline on a VA? Is it pretty generous, or is there still, even though you're a veteran, you still have to have good credit to get it?
Yep. And in most cases, once again, credit scores are varying, but we can see eligibility in the low 600s and higher. But it does come down to debt to income ratio in relation to that credit score. You know, that's another Fannie Mae internal scorecard with their desktop underwriter that helps determine that information. But you don't have to have great credit to qualify for a VA loan. The biggest thing with VA is that you're eligible. You can get your certificate of eligibility through the VA because you served our country in whatever capacity. That gives you eligibility. And with regards to the underwriting on that, it is flexible. But I can't really pinpoint a score right now, more so to say than right now. It's in the low 600s. I mean, right now with this pandemic, it is changing so much. We just try our best to keep up with it.
Sure.
And but the nice thing about our bank is once you lock a rate, you're locked.
Nice.
So I'm not going to call you back tomorrow and tell you, oh, the rate went up. That doesn't happen with us. You're locked, you're locked. So if those changes do occur, we've got you locked. And I know that there has been some frustration with other lenders on not having the capacity to lock up front. And, you know, I think it has costed some people some deals out there, some of which we've kind of picked up on the back end and tried to put back together, have been successful to some regard. But while we're going through this economic restart, you know, we all just have to be mindful of everything that's going on and make sure that we're doing our part to take care of our customers, create the right expectations up front, and let them know if we feel like something could change. And a lot of times I'm tracking rates for refis, and I'm like, you better lock. You know, we're always talking about that because if it goes away without a lock, there's not much we can do about it.
Sure.
And hopefully, as we continue to reopen our economy and follow safe guidelines in doing that, we can find ways to continue to open up those underwriting guidelines, and hopefully our flexibility return to what it once was, which 580s used to be a place for FHA. And that's just not the case right now due to everything that's been going on. But hopefully we'll get back there someday. And in the meantime, we'll just keep working with the other tools and resources we have to give the customer those good expectations.
Yeah, no, that's awesome. Couple other things, you know, I really appreciate you taking the time to explain the difference between those four. We talked about what the rates, I'm looking at the ticker across the bottom here. Who's the mysterious underwriter? I put that in there because those crazy underwriters, I met one, they're like a leprechaun. You don't really know.
Man behind the curtain.
Yeah, there's somebody back there that's like, your deal is dead, or we got to wait for this, or we got to do that. And I'm just like, are you kidding? Come on, let's, what's going on? It's gone to the underwriter. So I met one, so I know they're real, but what's the underwriter's job, and why don't we ever get to talk to them or see them? They just always tell us, hey, there's a problem, or we're waiting for the mysterious underwriter to approve us.
Sure.
What's going on with
well, I think with regards to underwriting, and I know that a lot of times with realtor partners that I talk to, they're waiting. We all are. And what they don't understand is, you know, or there's at my particular bank, there's several loan officers, and when you submit a file, it goes in line. And boy, you should see the line right now. It's long. And in addition to that, we're asking questions. Underwriters ultimately take the file that we've packaged with the appraisal, the title, the income docs, and everything, and they make sure it's acceptable for whatever loan program we're processing. And they work diligently. They're very meticulous, because at the end of the day, if we close a loan and something has fallout, they're accountable for it. The gentleman in my office, I consider to be one of the smartest human beings on the planet. And the thing that I am thankful for, so thankful for in working with Thompson Kane, is that there's a lot of people that, as we say, throw it against the wall and see if it'll stick. And that is not the case with us. Realtors get frustrated with me sometimes because I take 2, 3, 4 days to pre-approve somebody, but it's because they're self-employed. And I want the underwriter to look at those tax documents and give me an accurate income figure. I want the underwriter to look over a property listing and see if there's any red flags for the loan program. Is there chipped and peeling paint that would have to be remedied? Once again, we're creating good expectations here, but if I don't have that underwriter look at those things up front, I'm going to have fallout. And then you lose confidence in the person you're doing business with. And we do everything in our power to pre-approve people accurately and make sure it's accurate, and B, close on time. And if we're doing those two things, we feel like we're building ourselves a good position to grow our business. The underwriter is our best friend. And when debt ratios are close, we might go as far as to get a verification of employment up front on a borrower, look at the pay stubs, loan program eligibility requirements. Do I need a verification of rent or do I not? Alternative trade lines.
Sure.
One time a guy gave me his Apple Music, 12 months paid on time, Apple Music, $9.99. Is that an acceptable alternative trade line? I don't know. Ask the underwriter. For the record, it is an acceptable alternative trade line. Even though it's only $9.99, it was paid on time for 12 months. Came directly out of their account. And it was verifiable. So one of those things, the underwriter, I like to say that he's our backstop. And if we utilize him right up front in the process, which probably drives him crazy at my office, we ensure we don't have fallout and that we're going to close the loan that we pre-approve. Self-employed income is probably my best example, though. While people have an idea of what their gross income is, their expenses play hard into that. And you make a bad assumption. And I'm sure you've heard the old saying, but you and me both are going to look like you know what. So it's one of those things where we don't assume, we get the facts, and we make sure that it's right before it goes out. And that underwriter plays that. And then, of course, once it goes in, we're like, hey, you looked at this up front, get it done. And they're confident in being able to do that. So we're thankful for the underwriter, but that underwriter is a busy person. And oh my gosh, if I gave you and everybody else I knew his phone number, he'd probably wring my neck because we bug him enough. Well, no, they're great.
So they exist now. I know, but yeah, I'm working with another deal right now, and it just keeps getting delayed. A different bank, they wouldn't go local on me. They went on the internet. It's an internet bank, and their underwriting department is a joke. It's just so miserable. So miserable.
To the defense of everybody, the deadline is the most important. Right now, we are swamped. Swamped. It is like a roller coaster of nerves and anxiety. The big thing with me in relation, good or bad, I'm going to let you know up front what's going on. If you call me, I'm going to pick up the phone. A lot of times when it gets bad, people just kind of turn their phone on silent and push it over and like bury their. That's not going to accomplish anything for anybody. If there's going to be delays, if there's going to be issues, let's make sure that the expectation is identified immediately. Everybody's swamped right now. But as a team, we try our best to work together. Team being us with the realtors, with the borrowers, with the title companies, with the appraisers. I'm blessed in Quincy, in Hannibal, and the other states that I work in. I have some of the absolute best partners in this business, and I'm thankful for that. I think Quincy is an awesome market, just absolutely awesome. And the relationships that I've built here with all the strategic partners, including the realtor market, you all have an awesome market, and I'm happy to be a part of this. And yeah, it's tough right now. Main thing is let's make sure we're being upfront with each other at all times. And I appreciate that about you as well. You know, just making sure that we're there. We address problems as soon as they come to light, and we just get through them. And, you know, that's the best thing you can ask for in anybody you work with.
Yeah, communication is so important. I mean, not just in mortgage land or realtor land, but in everything. Because if you can keep everybody at the same spot, even if it's bad news, you can deal with it. But as soon as people do what you're talking about, mute their phone, put it off to the side, it's like, how can I help you? What can we do? If I can't get a hold of you, I'm kind of done. And so frustrating for everybody when that happens.
Well, and I mean, this is a big step. We deal with it every day, but to a lot of people, this is a once, twice, three-time decision in life. For the ones that only do it once, and it means a lot. And
yeah,
it's never fun to say it, but you know what? If I waited a week to call somebody and tell them about the problem as opposed to telling them in 5 minutes, there's a tremendous difference in reaction to that problem.
there is, because that stuff festers like
Oh yeah,
bad,
and it does not go away. So don't think it ever will. You still got to get that deal on the table, and there's money invested in this, appraisal fees, as well as people's time, effort, energy. I respect that. My time is worth something, and I hope that obviously, to the borrower, to the customer, they understand that we respect that and we appreciate that. So it's it's just so wild right now. I mean, you should just hear my phone just going.
Yeah, you're probably doing it right now during this interview. Mine is too. But hey,
you know what? Strike while the iron's hot, because it can go hot, cold, quick. And take advantage of these opportunities. These are going to make us stronger. I mean, someday we'll slow down and we're going to laugh when we're doing half this. But I hope that never happens.
No, I think I'll be fine.
I mean, we're going to run out of houses. We're going to run out of houses.
No way. Speaking of running out of houses, this has nothing to do with it. Let's talk about the process. So the process. Yeah. Hey, Jason, I need help. I'd like to buy a house.
Sure.
What does that look like?
Well, unlike a lot of banks, we're very technologically driven. I guess I shouldn't say unlike a lot of banks. There's a lot of banks out there that utilize tech as part of their process and platform. But, during this pandemic, I know a lot of brick and mortar places were closed, banks included. The capacity to sit down and talk to your banker about what you're trying to accomplish. For safety guidelines, everybody at the offices that I work with at Thompson Kane, we all work from home. So we immediately set that up for safety reasons, but it was business as usual. There was never a time where we just stopped working. We just did it from home. And to some capacity, some of us are still doing that from home. It's all about safety, number one. And with that being said, the market, though, still stayed busy. But I have an app. I have an online portal. I'll be happy to call you. We don't have to meet in person. We can get all this done without having to sit down and put you in a position of being uncomfortable. On our refinance programs, some of them qualify for appraisal waivers. So there are certain things that Fannie Mae's take into account. Also, for safety reasons, if the credit's really good and the loan value is really low, it could qualify for even an appraisal waiver. And then all you're doing is scanning the PDF documents, and away we go. We e-sign our initial disclosure package. Outside of 2 documents, everything is e-signed. So really the last thing in the process where you would ever really have to do anything where you left would be go to the title office to sign. But the first things first, you got to get pre-approved. Getting pre-approved up front, we're going to establish your budget, what interest rate you qualify for, what loan program you qualify for, and if there's anything to be of concern, do you have enough cash to close? Is your credit close? I typically tell people, do not inquire, don't borrow money during the loan process, don't do job transitions, things like that people need to really consider are all isolated and explained up front. From there, that pre-approval is good for 90 days, and then they go out and they find a realtor who's going to show them homes. I'm then going to touch base with that realtor and say they're pre-approved USDA. It's got to be USDA eligible. Guidelines, no chipped or peeling paint. So as far as the red flags or problems that may occur with property condition, this is the max amount they qualify for. This is where they want to be on payment. There you go. The realtor now has everything that the borrower knows, and now as a team, we're going to work together, and then we find the house. At that point, we typically touch base again. We talk again about closing costs, because now we know what taxes are. We'll recommend the borrower get a homeowner's insurance quote so that when we're pinpointing payment, we're being as accurate as possible in the information we're giving them. At that point, once everybody's comfortable, you all negotiate the contract and then get it over to us. At which point that initiates me to request all the applicable income documentation be sent in from the borrower. After that, that initial disclosure package will go out to e-sign. We'll We'll order the appraisal, we'll order the title work, we'll bind the insurance, then it'll go to our mysterious underwriter who will package it all up for closing. We typically move faster than the average bear. I think right now our expectations are somewhere between 30 and 45 days on most loan programs. Right now I've heard of some lenders going slower than that. Before this high volume market hit, we were doing 15 to 21 days on conventional and FHA. But right now, don't you write a 21-day contract on me. James will kill me.
I think it's a great
right now,
like Jason said you could.
No, but we have a lot of experience. We have people constantly looking over the documents. We try to make the underwriter only look at it once. That never happens, but twice happens quite a bit.
Yeah.
Because there's just so much that goes into it. But once again, thankful to work for this company. Of course, once it's underwritten, our favorite words is it's cleared to close.
Yeah, I like that word. That's a good CTC, baby.
CTC. Once we clear it to close, it goes to the title company and they balance our closing disclosure, all the final numbers.
Yeah.
And we discuss that with the borrower so they have a good expectation on if they have to bring funds to close and what their final payment is.
Yeah.
And where every dollar goes, because every dollar goes somewhere different on that closing disclosure. And we'd like to be as transparent as possible and make sure that they have that understanding so that when they go to sign, everything does go smooth.
Sure. Well, I think that's a pretty detailed summary, overview, analysis. That might be a better word. Really looking into the USDA, the FHA, the VA, the conventional, the bits and pieces, whether it's 6%, 4, 3.5, or 3, whether you have PMI or you don't, you got funding fees. Oh, one other one, jumbo loans. At what value do they kick in, and how do things change when you hit a jumbo loan?
Well, on a jumbo loan, every state and county has different conventional loan limits.
Okay.
So once you've exceeded the conventional loan limit for that county, it goes to a non-conforming program, or what we know as jumbo.
Okay.
And in my experience, and with pricing right now, pricing's higher on those programs. But they do vary based on, like I said, state and county. The only one that I have memorized as of 2020 is Cook County, because I see a lot of that in the Chicago area. It's $511,400 is their conventional loan limit. But when you get to that point, risk obviously is a bigger factor because you're financing more money. And with regards to that, you're just going to see rates be higher. Some
Sure.
of the origination fees and charges that are passed down, there's just not really a whole lot that you can do about that in some cases. In some cases, it's not applicable. It really does depend on credit. Obviously, having a high credit score and a low debt ratio is going to maximize your pricing in the jumbo market. But that is where you go after you've exceeded the conventional loan.
Does the 511 purchase price, or is that the loan amount?
That's the loan amount.
Okay. All right. Well, there aren't going to be very many people probably watching this that are concerned with jumbo loans. But there might be someone, so I wanted to ask it. But man, I really appreciate your time. Jason,
I have enjoyed this a lot, and I appreciate the exposure and the opportunity. We're here if you need us. And I always tell people, I try my best to always answer the phone, but I feel like I'm always on it these days. So if I don't answer it, I'll call you back as soon as I can.
Yeah.
I'm just dealing with everything as it comes in, but thankful, appreciate any opportunities, and look forward to helping.
Yeah, probably much like you. I've always got time for one more person to help. And sometimes, though, that one more person is my family. So I may have to put the phone down, but I will get back. I will get back. I will call back. Sure, this is true for you. But I don't put it on silent and push it over to the side unless I'm doing a live video with Jason. So
ding, ding, ding.
Yeah, thanks a lot. I appreciate it, Jason.
Hey, no problem. Have a great day. Have a great weekend, and we'll see you soon.
If you made it to this part in the video, please share it with somebody you think might be interested in it. This went a lot longer than I thought, but man, we weren't really deep into this, and so I think it's gonna be really helpful for people. So thanks so much, Jason.
Okay,
thank you. Bye.